right, welcome back to China's stock markets. This is a weekly wrap. I am your host, Jack Kuzi, where we cover weekly everything that is going on in the mainland and in Hong Kong, in the second largest economy in the world. We cover its financial markets and specifically its stock markets, allowing you to make the best decisions possible. And this week, like every other week, has been a news-packed week within China, dominated mainly by Janet Yellen's visit to the mainland. It was, some commonality achieved during the visit. We're going to cover that. We're going to cover some areas of the Hang Seng Tech Index moving into a bull market and everything else. But before we do that, if you haven't subscribed on YouTube or if you haven't left us a 5-star rating on the podcast, wherever you listen to it, please do that now. Give us a like. Or give us a 5-star review wherever you're listening. It really helps build these channels. The numbers are building slightly better every week, particularly on the podcast realm. So let's keep it up. And that way I'll be able to, once we build up the viewers, hopefully I can do a little bit more interviews and get some subject matter experts on the show to talk about specific areas of China's stock market. Before we begin, let's just start with a disclaimer, as we always do. The video and contents are provided for information purposes only, does not constitute a recommendation to purchase or sell securities. Remember that this is not financial advice. You shouldn't rely on it. And while I try to keep everything as factual and up-to-date possible, sometimes I don't or am unable to. And remember, the opinions are my own. You may agree with them. You may disagree with them. Either way, let me know. Let's have a good debate about it. All right, let's get into today's agenda for the weekly wrap. So we're covering pretty much the 5th to the 12th of April 2024. It is 7:08 a.m. here in Sydney, Australia. I've woken up early. I've actually been slightly sick in the last couple of days, but I'm powering through. We're going to do quick hits as usual, just some quick news stories around Chinese stock markets. We're going to take a look at the weekly market performance. Pretty much Friday to Thursday is what we do if you've listened to us before. We're going to talk about the bull market and the Hang Seng Tech Index. We're obviously going to cover Yellen's visit to the mainland. We're going to talk about Baidu and Erniebot. I covered this in quick hits last week, but I'd like to talk about, how Baidu's going. Often forgotten, often maligned tech company within China. I want to talk about Huawei's Harmony operating system. I actually did a video on TikTok on this yesterday, which has done very, very well. It's actually had 16,000 views and about 170 comments. Not all of them were friendly. I don't know why. And we'll also talk about Premier Li, who's also done the round. So we saw, President Xi 2 weeks ago on the Charm Offensive. And this week we saw Premier Li, who's probably second in charge. Yeah, probably second most important person in that standing Politburo, go around promoting, innovation, productive forces, all the stuff that we've heard out of China. And then just last night, I saw these figures this morning when I woke up. CPI figures dropped in China. Very important, considering we had a hot CPI number out of the US during the week. All right, lots to get through. As always, let's begin with quick hits. I got one quick hit if you're looking at it on the screen here, if you're watching on YouTube. If you're listening via podcast, you don't care because you can't see the screen, but I've actually got a second one that's not up there. But the first one is NetEase. So NetEase jumped 4.1% on Tuesday following reports that 14 new imported games were approved by China in April. In 2023, China's gaming regulator, the National Press and Publication Administration, greenlit a record number of 1,075 new games, indicating robust support for the industry's expansion. To note, NetEase done very, very well, actually. One of the best performing Chinese tech stocks over the last couple of years, which has been a very barren one for Chinese tech stocks. Important in that, you kind of sort of halt on gaming approvals out of the regulators while they were busy, with their regulation and cracking down on tech companies, forcing, well, I can't say forcing, but, Tencent had to divest from a lot of things. We did see NetEase fall the week before on the back of, I can't remember what game it was, but not doing really well in terms of its app downloads, in terms of its rating of the games. However, I think this is a good sign for the gaming industry generally in China. and for their expansion overseas if they're getting games approved. The other quick hit that I wanted to cover was Alibaba during the week actually cutting their cloud pricing again. And this one was for international business in an aim to grow their international business. So I thought that was interesting. Alibaba really concentrating on building its cloud business. Remember, they scuttled the IPO for the cloud business very recently because of really bad valuations. They didn't think they'd get as much as they wanted to in relation to that. This is a tough industry. They have declined internationally because of, sanctions and I guess the negativity around Chinese tech companies running your cloud business. I think they've got 4% of the world's cloud industry. I mean, I'm talking outside of mainland China in terms of market share. But it goes to show you that domestically, this is a tough game. You've got Alibaba in there, Tencent is in there, Huawei, I think, is making some considerable gains in terms of cloud. You've also got a lot of state-owned enterprises that they're competing against. It hasn't really thinned out like we've seen it in the United States, where you get 3, 4, 5 major players. There's still multiple players within cloud there, and Alibaba obviously suffering the effects of that. They've cut prices. We saw that happen on the mainland about a month ago. We covered it here on the China Stock Market Weekly Show. I really need to think of a better name. I actually don't have a name for it. It's called China Financial Markets, a weekly recap, China Stock Market News. I don't know. If someone out there can give me a better name that's catchy, that tells what we do. I think China's stock market, I kind of like, but, does it flow? I don't know. If you can tell me, please reach out to me. But yeah, so a tough business at the moment. Certainly a profitable business. You got to think, with AI, they can certainly grow that business. We're going to talk a little bit about Baidu and how they're using Erniebot to grow their cloud business. But they cut again, and when they did that a month ago, it was met with responsive cuts from the major players within the mainland. Let's see if that happens. This is for Chinese cloud overseas. All right, that's quick hits. Let's talk about market performance. A bumpy week across most markets around the world. I do follow the NASDAQ in the US, not as closely as I follow China. But, it's been a bumpy week in the US. I think it's 4 out of 5 weeks NASDAQ is finished down. You got some data out of the US. We had job numbers, which are quite hot. Inflation data this week came out, which was quite hot. When I woke up this morning, though, the NASDAQ was up 1.77%. So, can't keep that index down, can you? No matter what. But let's look at what's happened in terms of Chinese stocks. So the SSE Composite Index for the week is down 1.32%. For the month, 1.1%. For the quarter, 5.35%. So going back 3 months from this date today, which is Friday, 12th of April. Shenzhen going back to Thursday last week. Thursday's close, down 2.76%, and 3.15% for the month. And the Hang Seng Index performing really well. And this is on the back of some really good performance by its tech darlings. Particularly companies like Meituan has done really well. You've seen a bounce in EV makers on the back of good auto sales by the regulator there, announcing those numbers. Hang Seng Index up 0.99, 1 month 2.35, 3 month 5.41. So you've seen a rebalance. About a month ago, it was really the mainland indexes that had performed really well or outperformed the Hang Seng, but we've certainly seen a bit of convergence there in that divergence we saw. Still 5-year, if you invested in the Hang Seng, you're down 43.28, 5 years 10.75 on the Shenzhen, and the SSE Composite Index 6.4. No doubt that China's stock exchanges have underperformed the US comparatively and emerging markets. But let's see if that will change. I tend to believe it will over the next 10 years, but hey, I've been wrong before. All right, let's talk about the next one here, and that is a bull market. So the HSCEI has entered a technical bull market. This is the Hang Seng Tech Index. For the first time since the end of COVID-19 controls in late 2022. Now, if you don't know what a bull market is, it's defined as a 20% rally from the lows. the HSCI is not a tech index; it's a broad index used within the Hang Seng, which covers a good range of industries. All right, so I thought generally, let's talk about the performance. I mean, we looked at the performance just now. It's been a good quarter or a better quarter for Chinese stocks. And I thought to myself, okay, well, let's review the quarter and let's talk about why it's been a better quarter. And there are a number of reasons. The first one is you've seen a big boost from its tech darlings. So if you look at the likes of Meituan, Pinduoduo, it's not necessarily listed in Hong Kong, so not a good gauge. But JD, even the likes of Bilibili, Alibaba, decent. Tencent has had a decent rally. Its tech companies have done pretty well, and I've always said that if you're going to look at a broad, sustained market rally within China, within Chinese markets, depending on what index you look at, then you have to, it has to be led by its tech darlings. And I was on radio, on a BFM radio recently. Sorry, not BFM, it was Money FM in Singapore. Yeah, sorry, I was on Money FM in Singapore, and they asked me, what's your playbook for China? And I said, use the same playbook that's worked in the United States for the last couple of years and apply that playbook to China. And again, this is not advice. And I meant you have to look at its big tech companies. They're significantly undervalued. I think they're going in a renewed area of growth. We've started to see telltale signs, particularly out of their earnings calls, but particularly around policy from the CCP or the Chinese government or the Chinese regulator, whatever you want to call it. I highlight a little thing like Alibaba being allowed to make 2 massive investments in AI startups. They're the poster child for the bad boy in China. So it's been boosted there. And a lot of the tech companies which we've covered have sector buybacks. They're buying back their stock and they've increased their dividend. You've also seen a massive spike in electrical vehicle sales. And you've seen new approvals on online games, which we covered from NetEase. So, you're starting to see growth out of growth companies, which have been capped in terms of their growth in previous times. I look at, Tencent being their approval in terms of WePay, pretty much allowing them to lend more money. Now, remember, one of the biggest crackdowns that we saw in tech regulation was on, Tencent is WePay and Alipay's payment system, right? So I think that's helped. You've also had support. So like I said, Alibaba, Tencent, a lot of Chinese companies have share buybacks within there, which always helps. We had a figure about a month ago, I think, where we talked about, Chinese stocks, Bloomberg as a measure of Chinese stock buybacks, and it's at record high since it's been measured. Now, it's only been measured for the last couple of years, but a growing stability. You've also had policy measures from China. I mean, there's no doubt you've had the Chinese national team coming in and buying stocks and holding them. You've had regulation of quantity funds, which I think has been, helpful in terms of smoothing out some of the volatility. You've addressed, they've tried to address the housing crisis. You've seen short-stop stimulus move. No bazooka move that the market wants, but certainly policy support. And we've seen that from figures. We saw trade figures were good. We saw PMI was expansionary for the first time in 6 months, and the largest expansion we've seen in acceleration in 14 months. We saw retail sales figures were, better. We're going to talk about the CPI number that came out yesterday. Positive CPI number, but not as good as everybody wanted, but positive nonetheless, kind of curbing those fears about deflation within China. So I think that has been quite helpful. There's been a bit of optimism around, okay, we've kind of seen the worst. And that's certainly, echoes to some of the data that we just talked about. You've also seen a commitment from, the regulators there to market stabilization. I think you've seen Chinese citizens come back into the fold, which I think has helped also. And I think one of the biggest areas that we've seen also is growing foreign investment. So There's no doubt that fund managers, investors around the world, when you look at their emerging market exposure, has been underexposed. And I've always said that they will chase their tails very quickly. And we've seen an element of that, an element of money coming back in. And this could be a further boost for equities going forward, or it could reverse the other way. We could get some policy measures from China that freaks the hell out of everybody, and then they run again. But we have seen some movement and some foreign money come back into Chinese equities. And you can't ignore China. I keep saying this. You can't ignore it. You can't say it's uninvestable. It's too big. I mean, it's a phenomenal economy. But, I am a China bull. And then I think the other one is you've seen some decent earnings, right? You've seen some decent earnings from companies. We've seen some decent earnings out of the Tencent. We've seen some decent earnings out of Pinduoduo. We've seen some also decent earnings around, old Chinese stocks. China Motor, PetroChina had a really good earnings season. Yum Brands China had a great earnings call. You've seen some strong earnings reports. Not blow it out of the water, but hey, recovery's in sight. Consumers coming back in. There's been some stabilization. I think that's helped. In terms of Hong Kong doing really well, I think you've seen some flow from the mainland into Hong Kong to buy some of these undervalued stocks, which I think has been quite decent. You got to remember, the mainland, even though it's underperformed, has outperformed Hong Kong. We looked at those figures earlier, the 5-year performance. The mainland's down around 5, depending on what index you look at. However, Hong Kong's down 20. So, kind of like things are cheap. Let's go into there. And, you've seen a bit of a, as I pointed out when I was doing market performance, a bit of convergence back into, from mainland into Hong Kong. But that's a bull market there. Good to see some positive signs of recovery. I still think, there's some really good tech companies out there in particular that are completely undervalued, and the market is mispricing them. And that's because of regulation and outside noise. All right, so this probably dominated the news story out of China. Definitely Chinese media covered this, particularly had a focus on it, and that was Janet Yellen's visit to the mainland. Second visit to the mainland, I believe. And you can see her there shaking hands with Premier Li, who we will talk about in a little bit later. But I think it's prudent to cover what happened in there. So she visited China. And if you don't know who Janet Yellen is, she's the US Treasury Secretary, probably the leading economic voice, the highest ranking economic voice within the largest economy in the world, the United States of America, visiting the second largest economy in the world and the two major superpowers, discussing, areas of concern, particularly around trade, particularly around economics. Janet Yellen, before she went there, talked a lot about Chinese overproduction and overcapacity. Now, if you don't know what overcapacity is, it's producing a lot of something and then having excess capacity which doesn't meet your domestic demand. There's not enough domestic demand to buy the products from it. Therefore, you have overcapacity, and therefore you export that to the rest of the world at a cheap price to sell it, and therefore you make domestic players around the world uncompetitive. Now, Janet is, or Miss Yellen or Mrs. Yellen is, confirmed as saying you should buy the cheapest thing possible for the best possible price. So I don't know what the issue there is. I understand where they're coming from. There's a lot of talk about overcapacity. Some strong words by her in China, which is not necessarily the case. Usually, it's all, hunky-dory, things are great. And then you come back and you say, we told them X, Y, and Z. But I thought it was actually quite a good trip. I thought, it's really good when both of these countries talk to each other and visit each other. It's good for the world. It's good for the world economy. It's good for China's stock market. I think it's good for the US stock market. We saw President Xi address, 20 or 30 CEOs from the US in Beijing last week, or the week before that, 2 weeks ago. But, during her 4-day trip, Yellen engaged in discussions with Chinese leaders, local officials, academics, students, and American executives in Guangzhou and Beijing. This is from CNN. The visit aimed at resolving escalating trade disputes and stabilizing relations post the Biden-Xi Jinping summit, which was in San Francisco. Yellen addressed the threat of state-subsidized exports like EVs, solar panels, and batteries. And definitely there's an overcapacity of EVs and solar panels and batteries to American jobs and businesses. There was a little bit talk about Russia, a bit of the against the Russian banks. Nothing, but just said, don't oversupport. Make sure the support that you give or any deals you do, doesn't involve in the war effort. I thought it was good in terms of the importance of dialogue. There was some funny moments where she drank a beer at a brewery. I think it was in Beijing or Shanghai. And she uses chopstick stills. I think she's a bit of a foodie, Janet Yellen. I listened to a Bloomberg show where they were commenting that she was a bit of a foodie. I share that in common with her. I'm a bit of a foodie as well. It was mainly overcapacity. But what are the Chinese going to do? They talk about productive forces. These are productive forces. I don't know what they're going to do. I don't know how they're going to address this issue. And I think they're going to continue on their merry way. Now, what the US does, whether it does an outright ban on Chinese EVs, whether it introduces a massive tariff, which has been threatened before, what does it do with solar panels? The Chinese are a world leader in solar energy. And if you want to achieve these net emissions targets that we all talk about, then the quickest way to do it is to buy Chinese EVs and buy Chinese solar panels. So, nonetheless, I think in a year that's going to be full of geopolitics, it was a good sign that she came over. So I think it's a positive visit, positive for markets, positive for Chinese equities in general. We'll see what plays out when she returns. All right, so let's talk about this news story. Let's talk about Baidu and Erniebot. So I discussed this on TikTok last week, and I did mention this as a quick hit from a few weeks ago, and it was on the back of a rumor or reports by Chinese media outlets that Baidu had signed or is in advanced talks to sign a deal with Apple to collaborate on new Apple iPhones and Macs in China. So, Apple's often talked about, where is its AI division? It's kind of taken the route of teaming up with AI providers on their consumer devices. So essentially what will happen here, if the deal does go through, is that when you buy an Apple iPhone, it will have Baidu's Erniebot attached to it as its software. And I've seen some videos on how it works. Like I've seen it on how it works in terms of Samsung and Google within Hong Kong. But basically, you can take a video of something and it can tell you, where you are, and the history behind it, etc. I mean, you can think about it's obviously got a large language model like ChatGPT. So it's a big move for Baidu if it can actually crack this deal. Now remember that Samsung is already using Erniebot to enhance its AI features in China for its newest Galaxy phone. And if they can grab Apple, which I think is the third largest seller of phones within China, I think it's Huawei, Vivo now, and then Xiaomi or Apple. But they always bounce around. So if you look at Hong Kong, Google uses Gemini, and they actually compared Google's Gemini they actually compared Samsung's Gemini with Samsung's Erniebot. Someone did that and showed that, the Gemini is way out ahead, which is probably true. They're still catching up here, which you go back, we always thought that China's AI was, advanced, and it is, but it wasn't up to speed with with American AI when we saw the movement of ChatGPT. But they are under certain restrictions, certain things they can't do. It's not free flowing; it is regulated within China. Look, I think this is huge. You think about the amount of data that they'd be able to acquire, therefore improving Erniebot. It's a great way to teach your model. Teaching your models is very expensive. I think it'll, accelerate or help its advertising business. You got to think that accelerating or getting that data from Samsung and hopefully Apple iPhones And then you got to think that maybe a Xiaomi would follow, or maybe a Huawei would follow, or maybe a Vivo would follow, and that would improve its tools to its search experience and then drive advertising revenue. And they really want to do that because it's part of their improvement and their strategies. You also got to think that it's AI cloud revenue growth, which is an investing heavily in. We talked about, the market there and how competitive it is. That a launch of such thing would also assist with that. Now, this is a small part of their balance sheet, but it's certainly been growing and certainly something they want to grow. I go back to my point that I've made previously, is that I think in this area, there are two races going on in China at the moment. There's the race to win the large language model, the equivalent of ChatGPT, and there's the race to win the text-to-image, text-to-video race. In the large language model race, actually, I'll do the text-to-video, text-to-image race. In that race, I think there's three major players at the moment. There's Douyin, which is obviously owned by ByteDance, and there's Tencent, and then I think a distant third, but coming, is Kuaishou. In terms of the LLM, I think Baidu's out ahead now. We talked about this in their earnings call about 3 weeks ago. Rising revenue. Actually, they earned $91.2 million in selling Erniebot. Not much, but growing. It's all about data, right? And then I'd say second, Tencent, and third, Alibaba, but not necessarily through an Alibaba product, but rather through investments in Chinese startups. Now, Baidu's going for the fact of, here's Erniebot, now build your infrastructure on top of us and top of our data, which I think is a smart move. I just think those two areas are going to be a winner takes all. And Baidu, I think, is in the box seat to win the LLM model. And this is an often maligned stock within Chinese tech. Underperformed, used to be one of the bats, kind of got replaced by Meituan. I used to call it the mats. But I thought it was an interesting story. Nothing being confirmed, but if it does confirm it, I would really look at start to building a position on Baidu for myself personally. But I thought I'd cover that news. Now, that news came out a couple of weeks ago, but I really wanted to talk about it in particular around that. And remember, just the thing about China, about Baidu, it's in a very financially strong position. It's got about $18 billion in cash. It's got significant free cash flow. It's got a substantial cash reserve that we just talked about. And the company's stock trades at relatively low earnings multiple. And if you apply the revaluation that you've seen from American stocks in terms of AI and its advancements, then this thing could really move. It could really move. And I think it's been run very well in the last 10 years, but I think in the last couple of years, particularly with AI, I think this is one to watch out of the tech giants within China. Next topic, let's talk about Huawei's Harmony operating system. Now, this is old news because Harmony's operating system, their unique domestic operating system, has been launched since January and the release of the Huawei Mate 60, or is it 70? I think it's 60, which, remember, had a Chinese-built, Chinese-designed, Chinese-fabricated Kirin processor in terms of semiconductor. Something people thought was, impossible 5 years ago. And the reason I bring it up is, and I brought this up on TikTok, I think this is a massive transformational change in global technology. Now, let me explain to you why. Think about the iPhone, or think about the smartphone. It's probably the biggest piece of transformational technology we've ever seen in human history. Yes, there are, the plane, the TV, the car, the third industrial revolution, train tracks. I get it. There are a lot. And maybe it's not the number one, but it's up there, definitely in the top 5. You can do anything from it, right? You can work from it. You can buy things. You can sell things. You can communicate. You can go on holidays. You can bypass the laptop. It's right in front of you. It's amazing. Well, when you operate on a phone, you've only really got 2 operating systems. iPhone's iOS, or Apple's iOS, and Android. Now, contrary to popular belief, Android is actually not owned by Samsung. It's an American system based out of Palo Alto, California. Now, famously, Huawei was banned from using the Android system in 2019 off the back of the whole, Huawei chips, and they were forced to push up their Harmony OS system. Now, they always had a Harmony OS system, but it was more built for the Internet of Things and electric vehicles and home appliances, or connecting the Internet of Things. But they really accelerated it. And remember, they were banned from Microsoft products, so you couldn't operate Microsoft products on that Android or basic Android system that they were operating. So they, fully tilted into developing their own operating system. And I'm sure there was help and collaboration from other Chinese tech companies and the Chinese government. Now, we've seen this being tried before. Windows tried to do it with Nokia. Microsoft tried to do it with Nokia. Alibaba tried to do it with Yun operating system. And there was one more out of the US that tried to do it. It was Intel with Samsung, I think. Check that out. Fact check me there. Let me know in the comment section. However, they all failed. This is actually starting to work, and they're starting to work because they've received market penetration. Remember, they sold 1.5 million handsets within China in their first month of the Huawei. They believe that achieving 16.5% market penetration gets you to a concentration where other developers and other apps have to start developing their apps for your system. They achieved that in Q4 2024. In fact, there are over 200 apps now that are built for the Harmony OS system. Now, that doesn't sound like a lot, but they're big apps. Alipay's got their app up there. Most of the state-owned enterprise banks like ICBC, China Industrial, they've all got their apps on there. I think WeChat is on there. They've also invested in, harvesting or promoting developers out of universities and coders to start coding around the system. And from all of what I read, it actually is going really, really well. And the reason why I bring this up is it's a massive move for Chinese technology, because what it allows is it allows the Chinese tech companies of the Meituans, of the Babas, of the Tencents, of the plethora of Chinese tech companies that are available in China to start to develop their apps, to start to innovate on a system where they are not fearing being banned or being cut off or oversight from Big Brother in the United States. It's a unique ecosystem, unique to China, owned by no one but China, where Chinese companies can innovate. And if you want to talk about the movement of Chinese companies into the global south, the movement of Chinese companies around the world, they need an ecosystem where they can't be cut off from the United States, or can't be banned, or can't be restricted. And this Harmony OS system on a smartphone, which reaches consumers and homes and individuals no matter where they are in the world, this could be a massive game changer. When you combine it with the fact that the largest smartphone makers in the world are Chinese, right? Yes, you've got Samsung. Yes, you've got Apple. But then you've got Xiaomi, Huawei, Vivo, and Oppo. Out of the 6, they've got 4 of them. And we're talking about major players selling their phones all around the world. Now, whether countries start banning these Chinese phones if they use the Harmony OS system is for another story. But I think this is massive. And the fact that they've seen massive market penetration within the mainland tells you that the Harmony OS system could actually be the most dominant system in China within 10 years. And you've never been able to choose with a third operating system. You've always had to use either the Apple iPhone or the Android system. And I covered this on TikTok. I implore you to go listen to it. It's actually done really well. I'm a bit flu-y or sick today, so I didn't give it the emotion that I gave on TikTok yesterday. But check it out. But it's a clear sign of decoupling. And I often say this, is that we talk about technology. I think technology is the greatest force in the world. I think it's the best areas to invest in. But technology is no longer a sector. It's the driving force behind all sectors. And when you really narrow it down, when you really simplify it, there are only 2 types of technology in the world. There's US tech and there's Chinese tech. I know that's a very simple way, but it is. They are the largest tech companies in the world and the largest tech innovators in the world. So I thought that was interesting coming out of that. It's one to watch. And it's a big move for Chinese technology, a massive move to actually have its own operating system. And from all the comments that I read on TikTok yesterday, and everything I've read, it works well. It's not a crappy or shitty system, excuse my language. It actually works really, really well. And you're seeing more apps being built on it. All right, let's take a look at Fitch, who a couple of days ago came out and cut the outlook on China's debt to negative from steady. The market really brushed it aside, but I think it's worth looking at. Goldman Sachs the next day came out and renewed its growth target on China, increasing that. But the agency expressed concerns about China's economic growth becoming overly dependent on housing, which could lead to a steady increase in debt levels. I actually disagree with that. Now, this is one of the greatest transformations. 5 years ago, China's economy was based on, maybe not 5, 5. I heard someone say this on Bloomberg a couple of days ago. It was based on property growth and state-owned enterprises. Now it's based on consumption and innovation, which I tend to agree within 5 years. However, Fitch downgrade reflects growing uncertainty about the future of the world's second largest economy. Particularly as Beijing attempts to shift growth away from housing. I think this is a positive, solid move in the future. The decision aligns with Moody's previous downgrade in December, indicating broader concerns about China's financial stability and debt trajectory. Fitch's assessment suggests that despite China's efforts to stabilize the economy through fiscal policy, the potential for increased debt could outweigh the benefits of such measures. Now, China's government quickly disputed Fitch's assessment, arguing that it underestimates the positive impact of fiscal policies on growth and debt. The downgrade follows a similar action by Moody's in December and comes at a pivotal time with China about to release key economic indicators. Inflation, one of them. Fitch maintained China's long-term foreign currency issuer default rating at A+, but highlighted the importance of fiscal support for GDP growth. Market shrugged it, didn't really care, and moved on. But, had to mention it, pretty big move. I agree in some parts. You got to remember, they are trying to stabilize what has been an awful property market. And they just don't want to inflate the market anymore. They don't want to, I think, follow bad debt with even worse debt in terms of fueling its economy. But that was to note within China during the week. All right, second last here, we'll talk about Premier Li Kang, probably the second most important person within China. He met with economic experts and business leaders to discuss China's economy ahead of the first quarter data release. It's just a part of an offensive here, right? And this is where I think you're seeing, the market's not liking, the market wants massive bazooka policy support, what we saw out of the Chinese in 2006 during the financial crisis, and what we kind of saw of that in 2016 when we saw the market turn down. They're not going to do that now, but they're sharp, short pushes, but they're also kind of, the Marbo of things is getting better. Things like this, things like President Xi. I think Premier Li visited tech companies a couple of weeks ago. He discussed on sustainable economic growth. He acknowledged the lack of demand and aiming to remove barriers to stimulate internal growth through scientific and technological innovation. Right? And this is on the back of upcoming first quarter economic data, which is going to give us an insight to the recovery and the growth target of 5%. Li emphasizes the need for policy consistency and practical implementation amidst a complex and severe external environment. Participants in the meeting acknowledged positive development factors and improved market confidence, though challenges remain. Okay. He also quoted, and this is by the Chinese national TV, what am I looking for? The Chinese national broadcaster. China needs to focus on scientific and technological innovation to promote industrial innovation and the outstanding issue of insufficient effective demand as it looks to build internal growth momentum. So he kind of commented or kind of acknowledged that, demand is low. The consumer needs a push. We're here to push it. And I just think, when you compare this to 2 or 3 years ago and some of the rhetoric we saw out of regulators, and officials, it certainly has changed, and I think that's led to a bounce back in Chinese equities, and I think will help long term as long as that is maintained. All right, let's talk about the CPI print and just finish that. That dropped last night. I woke up this morning and had a listen to it. Brendan Ahern, who's the chief economist or chief market strategist at CoinShares, who I actually listen to a lot. I think he's probably the leading person when it looks, you're looking at Chinese equities. He expected 0.4. He was a bit disappointed with the year-on-year CPI growth. He did talk about, leading into the figure, he was looking at hog prices and pork prices, which had increased significantly. Now you got to remember, pork is a major staple of Chinese eating. He also talked about vegetables, pork, eggs, and fruits. However, it came out at 0.1. It was modest. It was 0.1 compared to same month last year. The subdued growth rate suggests that inflation pressures remain mild. So there's no inflation in China, which is a difference to everybody else around the world. There was a decrease of 1% in the CPI from February to March, indicating contraction in consumer prices over the month. So they're not stimulating as hard as they want to. The core CPI, which excludes volatile items like food and energy, showed a slight increase of 0.6% year on year, maintaining a moderate upward trajectory. The PPI figure, which measures the price changes from the perspective of the seller or the producer, fell by 2.8% year on year. This was a slight increase in the rate of decline compared to February's 2.7 decrease. So now the market shrugged it off with a bad news as good news, expecting that the weaker than expected CPI print would lead to more stimulus from the government. Now remember, they lowered their LPR rate, which is their 5-year term rate, which is kind of the one you use as a gauge for your home loan when you go for a home loan within China, by the biggest move they've ever done. Whether they go again, I don't know. I think they'll have a look at GDP figures and they'll go from there. But this was a miss, but the market took it as bad news is good news, expecting more market stimulus. Now, if it doesn't get market stimulus, it has been disappointed many times over the last 6 months from China and the Chinese regulators, we may see a sell-off on the back of that. I don't think an extended sell-off, but, at least a little bit. However, look, negative, really bad. We were worried about Chinese deflation. Everybody's worried about China doing what Japan did. You have a massive decrease in asset prices. People stop spending, start saving money to pay down their debt, and you have 20 years of no growth that's happened in Japan. Now, China has always been acutely aware of that Japanese decades of no growth. This was a disappointing figure. You want to see a bigger growth in inflation, which is an indication that the consumer is coming back and the economy is back to growth. But it wasn't oh my God, let's throw the kitchen out. What time am I looking to throw the bathhouse out? I don't know. I'm not feeling great here today, guys. But that was the CPI print for the week. That is us. Thank you for tuning in. Please leave a like. Please leave a comment. Follow the channel. If you listen to me on podcasts, give us a 5-star review. And as always, good luck with your investing.